So today's guest is Frank Furman. Adam and I just had a conversation with him, and oh my God, that was really cool. His investment concept, the creative things that he and his partners came up for single family homes. I think Adam got a really great takeaway.
Yeah, Frank had a quote where he said, if it's profitable, it's possible. And from that concept, he decided that he was going to blend technology with the old school room sharing or house sharing of rooms. And so he's created a concept called PadSplit. And that's exactly what they do is they rent houses by the room.
So join us in this episode to find out why it's not really a dorm. It's a dorm, but it's not really a dorm, right?
It's a dorm, but not a dorm. Fair
That's
enough.
right. So, all right. So let's get to it. Hey, Frank. Hey, Adam.
Hi, Vee.
Hey, B, how you doing?
Hey, I'm good. How about you, Frank?
I'm doing great. No issues.
Great to have you here. I ran into you several months ago at an event, and I was very impressed by your concept and what you do. But first, can you give the audience a quick introduction?
Sure. So my name's Frank Furman. I'm co-founder and chief growth officer of PadSplit, and we are a marketplace platform, the largest one in the country that focuses on co-living. And the way to think about it is, think kind of like Airbnb, but instead of being fractional in terms of time, one occupancy, we're fractional in terms of space. So rent by the room, right? So investors work with us on one side of our marketplace. They list properties on our platform. On the other side, long-term residents come and rent rooms. The reason that landlords work with us is just about double their yields. And the reason that renters work with us and find rooms is that you can rent a room for significantly less and with more flexible terms than you would say get an apartment. So for the kind of price and convenience. So we're headquartered in Atlanta. We kind of work all through the Southeast and a little bit of the Midwest. About 150 folks. We're sort of in that awkward adolescent stage between scrappy startup and kind of real company with all the associated growing pains. But having a lot of fun with it.
Well, tell us about what you did before this real estate venture.
Yeah. So I went to the Naval Academy and got commissioned in the Marine Corps in 2007. So I spent about 7 years as an infantry officer, did 2 tours in Afghanistan, commanding at the platoon and company levels. Worked a little bit in kind of government R&D for the Office of Naval Research, managed a portfolio of R&D programs for a while. And then I got out, totally did something different, went to McKinsey & Company, the consulting firm, their London office, and then worked across kind of private equity and pharmaceuticals and served a number of clients. I then decided to change it all up again, moved back to the United States. I'm from here originally, but transferred to our Atlanta office, eventually went to Georgia Pacific, took over as a general manager there, managing a portfolio of brands, and essentially got to the point where I'd been working and I had a comfortable job, but I kind of itched for something new and something that was a little bit different. And my brother-in-law, Atticus, who is, spoiler alert, PadSplit's CEO, but I've known him for 15 years because I married his sister. He's always been in real estate, been a real estate investor, and I'd invested as an LP in a number of his deals. He came and said, look, he'd started these companies and had more or less handed off the day-to-day. I was treading water a bit, perhaps, and in a corporate job where I didn't feel sufficiently challenged, gone from maybe working 60 hours a week down to a fair amount less. And so we meet up and he said, I've had this idea in the back of my head for ages, this kind of co-living concept, this rent by the room. And he'd done it on the side. He'd built up a portfolio of single family homes. I know there's market demand for it. I know there are all sorts of operational challenges, but he'd been doing it for 10 years and he really saw how the returns were exceptional. And at the time, this is really 2017, maybe we were a bit early, but we thought, oh, the market's so hot, it's not going to go up from here. How are you going to find any good deals? You have to find alternate ways to find cash flow. So that was really the beginning of it. So started with a prototype house and kind of moved on from there and found other customers, built the team, brought on our third co-founder, John O'Brien, he's the smart one, who's kind of your Stanford PhD in physics guy. He's our CTO, and kind of went from there, joined a tech accelerator, build up, hired our first employee, Jean Brun, and kind of have been going from there.
So what year was PadSplit founded?
2017.
2017.
Yeah, and really got our start in 2018. We started having customers and such. But
the two guys who were partners with you, what were they doing before this?
So Atticus, he was an architecture major at Yale and moved down to Atlanta in maybe 2002 and really been in real estate since then. Worked on the land side as a commercial broker, started his own business in 2008 or so, Strine Construction, and was essentially a real estate investor, but started a general contracting firm, started a hard money lending firm. So that he's had kind of a long entrepreneurial career. John, our CTO, after getting his PhD in physics, he started two other companies. The first one, I forget exactly what they do, to be honest. The one after that, it's called Blanket Homes, which worked also in the fractional housing space. So they were kind of an Airbnb superhost and developed technology solutions for other Airbnb superhosts. So had some real estate experience, kind of machine learning background, but John has varied interests. You know, he'd worked with a kind of machine learning stock trading company and so on. So yeah, he's definitely the smart one.
So he had some experience with this fractional stuff. What's an ideal property for you?
Yeah. So the way to think about it is we are relatively agnostic in that we have single family homes, we have multifamily, but because the revenue generating unit is the bedroom, we tend to like larger properties. No shocker there. So typically larger single family homes that are either close to public transit or close to employment centers. And the way to think about it is the buy box isn't that different from any other rental property, but it's shifted a little bit, which is great for us because it also means a little bit less competition in a really tight market. But, you know, we like close to public transit. We like a little bit of density. We kind of have a Goldilocks strategy in terms of assets, and that in your nicer neighborhoods, it's hard to make the deals pencil, right? The highest and best use is perhaps to sell the property to a homeowner. In the worst neighborhoods, you have the other problem, which is, can you service this property? Can you send a plumber there on a Friday night? So we like neighborhoods that, you know, have other renters. So neighbors don't have challenges with renters and that kind of thing. We don't like HOAs, but aren't so low end that you have problems or challenges operating the property. What that ends up looking like on an asset level is urban, suburban, even kind of ex-urban homes that tend to be a little bit larger, tend to, you know, the dirty secret of affordable housing is to start with affordable housing. So you're kind of buying cheap where you can. So you end up with, say, our kind of almost ideal home is like a 1968 split level that has a lot of space. You can get a lot of bedrooms out of it, but isn't the sexiest format. So it's, you know, you don't have a ton of competition for it. You can really kind of operate it at a really high yield.
And so do you have to have a minimum, or do you look for a minimum bath count?
So bathrooms are super important, as you can imagine. Within co-living, the sharing of the bathroom is a challenge, right? So we enforce a minimum. You need to have at least no more than 4 bedrooms can share a bathroom. So as you're looking at the assets, you almost always have to start with 2 bathrooms unless you're going to add one. And there's a little bit of an art and a science to the asset selection that we're very involved with investors, where, you know, you may have an asset that works great and has 2 bathrooms, but one's, in the master. And okay, can you make that a common bathroom, or do you need to add one, or how does that work? So yeah, bathrooms are very important. But again, we've had people start with 3 ones. They've added a bathroom. It's no big deal. So it all depends on, you know, how creative you can be, what you're willing to put into it. Does it hit your wickets elsewhere?
So when you said larger, Frank, can you define that for us, what you mean by larger homes?
Sure. Generally starting at 3 or 4 bedrooms. So those kind of smaller rental properties that are, say, 2 ones are just really tough to make work, right? You don't get the same sort of bump in yield, so they don't make sense. And then from a square footage perspective, we're typically seeing homes that are at least 1,600 square feet to start. So, you know, again, there's that can vary a lot. Say around here in Atlanta, a lot of houses have basements. If you have a daylight basement, you get bedrooms from there that maybe aren't included in the square footage. In, say, Texas or Florida, you don't really have basements, so maybe the square footage has to be larger to start. So there's a little bit of a regional overlay to that. But I would say our average home probably is about 1,800 square feet. So a little bit larger than your average kind of rental property.
Do you guys look at the price of these homes? Is that a factor?
So we don't, in terms of our platform. So like Airbnb, you know, you can kind of list whatever you want. Now, when we work with investors, it's absolutely critical. So, and we have folks come to us all the time who are really bought into the model, bought into the social impact. They want to be part of the solution to the affordable housing crisis. And they say, here's a property. I'm looking at it. It'll be great. It's big. You have all these bedrooms. It's close to the bus stop. What do you think? And I'll say, it's $600,000. I don't think it's what you want to do. I think you should do better if you buy this house that's 250 and maybe isn't just as nice or so on, but your yield's going to be much higher. So, I'm a highest and best use kind of guy. That's just the way that it has to work. I mean, our conviction and the reason I got into this business is that, people get concerned about the affordable housing crisis for good reason. But the idea is if you can make affordable housing profitable, you can make it possible because you're leveraging the creativity and capital and expertise of the private investor. And if you can't generate above market yields, you have to subsidize it. Subsidy dollars are always limited. You get perverse incentives. So the yield's super important. It has to be, because that's what we're solving for. And if you can generate high yields, private investors will solve the problem. And so that's really how we think about the business.
So you guys take a property, 3-4 bedrooms or more, and you rent them out by the room on a weekly basis.
That's right.
Right. Okay. How do you go about determining what to charge? This episode is brought to you by Buzz Vacation Rentals, a premier property management company in Houston and Galveston areas. Buzz Vacation Rentals specializes in managing short-term rentals the right way. Give Buzz a call today at 281-549-8432 to learn more, or check out the website at www.buzzvacationrentals.com. Now back to the Real Estate Ballers show.
So we have the pricing is actually determined by the host who owns the property. Now we have a pricing tool that is there for when people are listing the property that draws from a number of sources, the market rents in that area, other pad splits that are listed in that area, the room amenities, if it is a private bath versus shared bath, and so on and so forth. So we give a recommendation and then hosts kind of price from there. But ultimately, the market decides. And because they're reasonably flexible terms, some people use different pricing strategies. A host may list a house and say, I've got 6 bedrooms. I'm going to price 1 lower because I want to get someone in quickly to get it occupied, and maybe the 5 a little bit higher. And then, maybe I'll be a little bit aggressive. And if I don't fill up quickly, I'll kind of tick them down over time. So, but we provide that kind of baseline tool as a first pass for people.
Will you explain how you get paid?
Sure. So essentially the exact same way as Airbnb, in that we take a percentage of collected rents. So you list a property, the renters pay through our website, we take a cut of revenue.
And do you make pricing recommendations?
We do make pricing recommendations, but the actual price is set by, same as Airbnb, in that when you list a property, it'll say, hey, we recommend you're charging $180 a night for this in this area. We give a recommendation, say, we recommend charging $155 a week for this room. And
then is somebody locked and loaded with PadSplit for a contracted period of time, or how does that work?
Yeah, great question. So there's a 1-month minimum for every stay. In part because you want that initial commitment. Also, we don't want to be classified as short-term rentals and all, fall under that regulatory regime. So all that's very important. Now, we also have a commitment-based pricing mechanism for folks. And the way to think about it is outside of that first month, which is the minimum for everybody, you may come in and say, okay, I want to book this room. If I want to sign up for 6 months, I essentially pay the lowest price because I'm signing up for the longest commitment. And if I want to sign up for just 1 month and have that flexibility, I pay a little bit more. And that way we sort of, balance it out, reduce the risk for people, of people leaving soon, and also communicate to prospective renters that this is a long-term arrangement. And some people, we have different use cases. We have folks who are new to town. Maybe they moved for work. Let's say they moved to Atlanta from Detroit. They don't have family to live with, that kind of thing. They don't really know the town. So they might say, hey, I'll probably live here for 3 months, maybe 2 months. I don't know. I want to get to know the neighborhoods. I want to get to know what I'm doing here. We'll see if I like this new job. Maybe I'll head home. Who knows? And so they really prize that flexibility and will pay a little bit more for it. But an extended stay motel is typically about double that price, right? Extended stay motel is about $300 a week. So, okay, I'll commit to a month. I'll have my flexibility. Now, they may stay for a year or 2 or 3. I mean, the price falls after they get past that 6-month commitment. So it's really about upfront, how are you buying down your risk? But it varies depending on that commitment.
Do you collect all the rent up front or are they paying weekly?
They're paying weekly and a move-in fee.
Okay.
Yeah, so yeah, collecting 6 months up front. I wish we could, but no, it's just kind of a high barrier. And part of our model is improving access to housing, and that's part of how we keep rooms filled. Is having this lower barrier to entry. So if you think about an apartment anywhere, you might say, okay, well, this is a Class C apartment, and it's $1,000 a month. That's not too bad, but it's $1,000. Maybe it's first and last month's rent. There's probably $1,000 security deposit. You got to turn on all your utilities, and they all might have their own deposit. You maybe get furniture, and all of a sudden you need, $3 or $4 to move into a place. And that's all well and good. But for a lot of folks, in fact, the average American doesn't have $3,000 or $4,000 sitting in the bank. So how do you give access to people, but still kind of maintain an acceptable amount of risk mitigation and flexibility?
So the homeowners already provide you the home with furniture, utility, internet.
Yes, that's right.
And then you guys would start managing it, marketing it, get the guests in it. I feel like I'm back in college. Are most of your tenants students, or what are they? Who are they?
That's a great observation. So the answer is most are not students. We do have some students that tend to be non-traditional, whether they're international students or adult students. You're right in that it looks like student housing. It is like student housing. And the thing to remember is, oftentimes people, they hear about PadSplit and they say, this is really interesting. I should talk to my kids about it. They would get it, kids share, it's like a Gen Z thing. I'm like, no. Talk to your grandmother. We didn't invent this. This is how people have lived for years and years and years. But culturally, we've kind of gotten to a point where we don't think anyone who's not a student or not in senior living could or should live this way. But of course, we all have, right? We've done it as students, right? When I was in grad school, I rented a room from exactly this type of arrangement. When I was in the Marine Corps, I rented a house, and then buddies shared it. We all kind of split our rent. And even now, I live in a house with six people. It's not because I'm crazy. It's because I've got a bunch of kids and an au pair and all those sorts of things. So I'm living in shared living right now. I'm the only one who pays the mortgage. That's fine. What's different is actually living alone. That's what's kind of strange. And the idea of, if you think back 50 years, if you were a woman working in New York City as, in an administrative job, you boarded, right? That's what you did. You didn't live on your own. That would have been unseemly. If you were a guy working in a factory 50 years ago, you boarded, right? It's like Ma Bailey's boarding house. It's what those gentlemen did. And then maybe you get married and get your house, and that's fine. So we've gotten away from that, but to a large extent, this has always happened. If you go to any major metro area, you can find houses that are rent by the room. You just don't really see it, and it isn't really advertised. So it's really kind of bringing it back into the light, doing it with a much higher level of safety and security and accountability that doesn't exist in the market today. So when you ask who our residents are, you've met them, right? It's the person who's the security guard at your office. It's the person who kind of ships your stuff and drops off your Amazon package, right? So it's drivers, security guards, people working in fast food, hospitality, generally people of lower kind of social network. Maybe they're new to town, maybe they're divorcees, people who can't live with family. Now we have students, of course. We've got truckers, those sorts of things, but it's a mix. It's 18 to 80. It's male, female. It's the whole bit. Average age is about 39. So it tends to skew a little bit older than people think. And students want to live with students, right? They want to have fun and date and play beer pong and do whatever students do. They don't want to live with middle-aged folks and that kind of thing. So it's working people. It's workforce housing.
So Frank, you said you're married and you have 4 kids?
I have 3 kids and a live-in nanny.
Got it. And how much are you charging each of them for their room?
Yeah, exactly. I'm charging them, but my collections rate is 0. So
So I have experience as an investor for a boarding house like this, without all of the sophisticated technology and the bookings and all that. And they were very low end. Means, socioeconomic means, and all that.
Sure.
And a couple of the things that I observed, I wasn't the main manager of it, but I would, from afar, I would see it, is the common area rooms always were a conflict source, like the kitchen. and who's cleaning the bathroom and who's cleaning the kitchen. So that was one thing. I've got a couple other comments that I'll be quiet and you can maybe talk about them. But the common area thing was always an issue.
Yep.
And then it seemed like there's always at least one of them that snuck in a cat, no matter what happened. There's always somebody sneaking something in, somebody in, some pet in, nonstop. I'm curious about that. And then I'm also curious about if you have any stats on the average length of time people stay there.
Yeah, no, all great questions. So I'll start with the easy one first. Our average stay is about 9.5 months. And so you have a number of folks who come in for a short amount of time. Maybe they're just
longer than I
city.
expected. Yeah.
There you go. That's, we're all about exceeding expectations. So that's perfect. We have people who stay for years as well. That's just the nature of it. So, but 9.5 months on average. And you raise a great point about the common areas. So we have a motto at PadSplit that we've had since the beginning, and that is that bad things happen on couches, right? And so you can imagine, our average customer is a 39-year-old woman, right? She's coming back from work, maybe she's on the night shift, and gets off the bus, walks in the house, walks in the front door. What's happening on the couch, right? People are fighting over the remote. Someone's letting their friend crash. People are eating some sort of like pasta or something that's messy on a soft surface. People are making babies, right? It's all bad. Bad things happen on couches. So part of the upfront work that we do with investors is really kind of talking them through how you make your property suitable for co-living. And there's more to it than just saying bad things happen on couches, but it's like roommate proofing the house, right? So okay, not only do you want to take that living room and maybe turn into a bedroom so it can be, more profitable, more revenue generating if you can, but it's also a matter of removing that source of conflict, right? Because you think everyone kind of goes into it and they think, I should really have this common area and it'll be fun and people, no. People want privacy, people want security, they want safe, clean, comfortable. They don't want people bringing in a buddy or bringing in a cat, those sorts of things. So there's a huge aspect up front that is about prepping the property. So everything from, for example, I've walked God knows how many houses with investors, 1,000. And, I'll go in one, they'll say, here's what I've done. Like, what's this bookshelf doing here? Like, I like books. I'm like, I love books. That's great. Get it out of here because, this isn't a library. What is a bookshelf? It's hard to clean. It collects dust. People throw candy wrappers behind there. If people want books, they can keep books in their room. You don't want storage space. You want hard surfaces. A dining area is great. It's a more respectful posture. You can't lay down. It's much easier to clean. It's hard surfaces. Perfect. Couches, we've already gone through it. So the actual physical asset is super important in terms of how you set it up. Then you overlay the technology, right? So to the point around people bringing in friends, people bringing in cats, people eating someone's peanut butter, all this stuff happens. We've obviously seen it all. A lot of it you can't change, right? It's human nature. We joke sometimes about the whole guest thing. We have a no guest rule. That's a default rule within PadSplit homes. It's not stronger than biology, right? Biology trumps everything. But what we've done is set up, everyone in the house has a profile with a picture. Everyone can see it. Everyone can rate each other. People can submit complaints. And what you really want is for people to understand those accountability mechanisms where people know it's against the rules. People know that they'll get reported on. People know that those reportings can mean that they will have to be out at some point. So what do you want is you're not going to stop guests all the time, right? That is a losing battle. But you want people to be hyper respectful, almost like think of it as like a sorority house where, hey, you can come in here, but you got to be quiet. You got to be out by 5 a.m. No, you can't do any laundry. Like, no, you can't talk. And if people are being sensitive to people who are, working and living their lives and, trying to be in this house, is anyone going to care? Probably not. But if you're causing trouble, that's when it gets reported and that's when it's being kind of communicated. So all those things are really, really important. We have a 24/7 call center set up to kind of field those complaints and so on. And hey, sometimes people just want to rate somebody. Sometimes people just want to vent. And sometimes people just want to transfer, right? That's part of the mechanism as well. That's a release valve for having those sorts of issues. So long story short, there's no silver bullet to any of these things because people are, as I like to say although I'm stealing it from Immanuel Kant, they're cut from the crooked timber of humanity, right? People are flawed. We're not going to fix that. But when you layer on having the right kind of asset strategy, setting it up the right way, doing the kind of screening and background checks, putting the accountability mechanisms and sort of responsive management, you can reduce it to a dull roar is kind of how I think about it.
How are cleaning and maintenance dealt with?
Yeah, great question. So the host is responsible for anything that touches the property, just like Airbnb or anything else. What we recommend for cleaning is to do a monthly cleaning of common areas. So 30 minutes in and out. And the way to think about it is, again, I'm a lapsed management consultant, so I think of things in a 2x2 matrix. But, your rooms, hey, that's your business. It's your mess. You got to do it, right? That's on you. The residents have to be responsible for most of the cleaning. Things that are urgent but common, so like taking out the trash, hey, residents have to take out the trash, right? You're not sending in a maid every week to take out the trash. It's not going to work. Things that are urgent and personal, so take the dishes, right? It's clearly my dish. I clearly put it in there. You got to do your own dishes. No one's going to do your dishes. That's a daily task. What the cleaning should be for is for kind of common, non-urgent tasks. So mopping the floors, wiping down countertops, wiping down the toilets, knocking that out quickly so the property feels fresh and, doesn't kind of fall out of line. And that's really, so once a month, 30 minutes in and out is kind of the thing. So not like an Airbnb style tempo, but just kind of there. And then obviously whenever you have to turn the rooms when people leave. Maintenance, we have a ticketing system built in to our platform. So they get communicated to the host, and most of our properties are professionally managed, with kind of traditional property management. Other people manage their own, and that's great too. So it all just depends on what operating model works for the individual.
So right now, here's the notes I've taken. You've got the cut from crooked timber of humanity. I like that line. Bad things happen on couches.
Critical.
A lot of visualization going there. And my favorite line that you said is when you said, if it's profitable, it's possible. I think that's just fantastic. And I love that one. But then that leads me to my serious question. And that is, if it's profitable for you to have this service, is there competition out there?
So the answer is, of course. There isn't really a kind of national technology-based competitor yet. I think that's probably inevitable. There are other co-living companies that are just simply different. They're maybe a fair amount up market from us and target more your kind of young person, prime zip codes who, I want to live in Manhattan, but I don't make a Manhattan salary. That's fine. The businesses look similar-ish, but it's a very different kind of customer, very different asset. So all well and good. I wish them the best of luck. It's just a different business. Extended stay motels are probably our biggest direct competition. So obviously millions of those rooms everywhere. Again, it's a competitor, but a different kind of business, different kind of operations and asset. And of course, there's people, like yourself who have owned similar types of assets and operate them on their own. You don't have to use PadSplit. People have done it. People have done it for years and years. And it's just a matter of, we like to think we're introducing new kind of operators into the market for new assets. But yeah, it's there's other folks out there, just none that really do exactly what we do.
Let's shift gear a little bit. Mm-hmm. You ought to have some fun story. Crazy moment.
Oh my.
Oh.
Too many.
So pick one and share your crazy guest story with us.
Oh God. Where do I start? What will our lawyers not kill me over? Yeah, I mean, we do joke all the time that our business makes so much more sense as a reality TV show. We could have one house, we have all the content, it'd be a lot more fun. We could have the confessional room, it'd be great. Because God knows things happen. Let me think. What is our gosh, I don't want to get in trouble, but let me give a first quick disclaimer. We have thousands of residents. The vast majority are really, doing the Lord's work, right? They're paying, they're doing the right things. Maybe they're in a tough situation. Maybe they're getting their start. Maybe they're just trying to save money, but they're doing everything right. In the role that I'm in, no one calls me up and says, "Hey, Frank, by the way, Jim Jones in room 2 just paid his rent today and cleaned up. He's a great guy." I don't get those calls. I get, hey, Joe Smith in room 3, had, freak out, whatever. So I only get the bad. So with all those caveats aside, yeah, I mean, we've had all sorts of challenges with folks. And some of it just around, maybe I'll give a few examples just around kind of mistaken identity and that sort of things. It can be confusing. I mean, well, I'll give you one. This one sort of predates us. We had it was actually an existing boarding house, rent by the room model that was being transitioned to PadSplit. And the investor had a property manager. The property manager didn't want to manage it. So we're taking it over. And this house had been set up. It's in Atlanta, been set up for years and years and years. And so we're like, okay, we're going to take this thing over. We're just getting our start. So I go over with our one employee to go meet everybody, book them into our system. And I meet this guy, Hondo, in room 7. I'm like, okay, hey, Hondo, like, great. Take down his information. He fills out the application, says his name is Hondo. I'm like, okay, perfect. Everything's good. And he was a little bit put off because no one had ever been in his room seemingly for years. And I go in, it's in terrible shape. I'm like, oh, we gotta get this fixed. And this is, your ceiling fan has exposed wires, we're gonna replace that. And he's like, what is this dude doing in my room? Like, get him out of here. No one's bugged me. So, and I'm doing the deep dive. I'm like, oh, let's look at the faucet. Oh, we need an aerator in this faucet. Oh, this thing's leaking, and he's not amused. And there's this abandoned car in the back. And I'm like, okay, does anyone know whose car it is? No one says anything. Well, I'm not proud to say it, but I essentially broke into the car, right? I jimmy the lock, I get in because no one's claiming it. And I look through the papers and I'm like, I think this thing's been abandoned. The name doesn't match anyone in the house. I'm like, you know what? It's like a code violation. It's an abandoned car. It's essentially parked in the grass in the back. I'm going to get this thing out of here. So I call a tow truck. It shows up. Hondo comes out and he's like, what are you doing? You're stealing my car. I'm like, oh no, this is an abandoned car. He's like, this is my car. I'm like, I went through. It's not registered to you. He's like, Hondo is not my Christian name. And then he added a few colorful, adjectives and descriptions of me. So his name was not Hondo. I won't out what his real name is, but we had him in the system the whole bit. And he threatened me for trying to steal his car. I wasn't trying to steal it. I was trying to remove it. But there's definitely, it's one of those things. It's every day is an adventure at PadSplit. There's no doubt about that.
That's a funny story. So if I was an investor, why would I consider using PadSplit instead of going about it on my own?
Yeah, so there's a few things that we do. One is the whole lease up and collections piece, which can be very operationally difficult. We handle kind of full stack. When we first started doing this manually, it's essentially was a cash business, weekly payments, very difficult to manage. You send a guy around, he's got the drop box, you pull it out, very painful. For us, all electronic. We handle all the payments and then remit it once in your bank account. So it's much easier from like a bookkeeping lender perspective. And then obviously we're always marketing the rooms and handling the lease up and all that, which can be pretty daunting. If you have 7 bedrooms in a house, are you creating 7 listings and all that sort of thing and managing them internally and all that. So we handle all of that. The other piece is around the management of the house. Maintenance tickets are a great example. So I'm living in a house. I submit, you and I are living in a house, right? Okay. I submit a maintenance ticket that there's a leaky sink. Well, you also see that ticket because it populates in your dashboard as well. If the host dispatches a plumber shows up, you don't answer the door and say, who's this person? My sink's working fine. Get out of here. So it's keeping everyone informed. Everyone kind of see, no property management software is really built for that kind of cross-house kind of transparency and managing a co-living situation. So we make that part much, much easier for hosts. And of course, we're set up with the vendor network that handles kind of leasing and insurance and so on, because a lot of that can be daunting for people in this space where, they've just never done it before. Their lenders never worked with this sort of situation or seen this sort of agreement. So we can kind of handle a lot of that for folks.
All right, I've got a couple of numbers questions for you.
Sure. Yeah.
When I buy a property that's going to be a short-term rental, it's hard for it to be financeable from a bank looking at a highest best use because they don't know what to bookmark this first. So I'm curious if this is financeable or how that would work, because I got to imagine you run into the same question. That's one. And the other one is when you go with the first a person who joins your platform in an area that you haven't been in before,
Mhm.
do you have a way to comp it, or do you just use your experience based on other markets, or how do you come about analyzing and evaluating?
Yeah, great question. So on the financing side, for us, it was always table stakes. If you can't refinance, we don't have a business. So we've worked really hard with a number of lenders to build a repeatable process so people can. So we have a third-party partner who we work with kind of hand in glove to get these across the line. And we've worked with dozens of other lenders on kind of one-offs. We're very involved in that process with folks. And so the short answer is yes, there are still lenders that they look at it and they've got the heart of an underwriter and they say, I don't get it. What's this? Why is it more this month versus that month? They don't want to hear that there's 5 Sundays in this month versus 4. They don't like that. And that's fine. Lenders have to run their own business, but we've done it enough and done it at a big enough scale that we've worked with plenty of lenders who are perfectly happy to lend on it. Now, you don't get benefit for the income in terms of the ARV. They value it essentially as a single family rental because, and I get it, if you defaulted and they take it back, it's a single family rental, so that's fine. But you could essentially get your cost all in as the ARV, which is fine. So yeah, financing can be a challenge with certain lenders, but across the board, we have a solution for it that's relatively straightforward. And then remind me what the second part was. I got down the track.
How do you comp?
Perfect. Yep, of course. So when we're first going into a market with our first investor, our first anchor investor, the short answer is we just overmanage it. We throw a ton of resources at it. We do site visits. I'm on a plane, I'm visiting. So, the last 18 months, we've launched 8 markets or so: Houston, DFW, Tampa, Jacksonville, New Orleans, Richmond, Indianapolis. Been to all of them. And, as far as comping pricing, I'd love to tell you that we've got, and it's beyond just the pricing, because you have the whole pro forma that you're working through with folks to say, okay, should you be paying as much in Indianapolis as you are in Atlanta? The answer is no, because I think rents are going to be a little bit lower and so on. We lean into it as best we can and, pull other market rents. We have kind of our pricing algorithm that helps. And a big part of it is just being open and honest with the investor to say, this is what we know and this is what we don't know. Indy's a good example. Rents are a little bit lower than they are in Atlanta. Atlanta, we have thousands of units. We really know the market well, submarkets, all that. It's great. When we went into Indianapolis, okay, price points are a little bit lower. We should assume rents be a little bit lower based off, market rents and what we're seeing. And the houses are cheaper, but how much do you account for it? And how much do you think about it? And how confident are we in the demand? Good news is our demand was really strong there. We've kind of exceeded expectations. I don't think that's going to be the case in every market, but we're probably overly conservative on the pricing when we started in terms of what we were recommending to folks. So, it's a little bit of an art and a science. There are other data points we can pull from and that we do pull from. It's not just studio apartments, it's extended stay motels, it's Craigslist listings. So we draw from a number of sources, but yeah, big part of it is just saying, hey, we're figuring this out. Come on this journey with us, and we'll learn as we go. And being honest about what we don't know.
So that makes total sense. So I'm thinking Vee's going to look at a property that she wants to buy in Houston, and she's trying in her head to figure out the highest and best use.
Yep.
And so there's always these rules of thumb for different methods that people use, and that's their starting point. What would a rule of thumb look like if it's a 4-bed, 2-bath, as an example?
Yeah.
Or is there a rule of thumb?
Yeah, so it's maybe a touch more than a rule of thumb, but we get our account executives who work with investors directly are almost always involved pre-acquisition to go through a pro forma with folks. And it's not rocket science, but it's somewhere in between rocket science and rule of thumb maybe. But, we have essentially a portfolio analysis tool where you say, okay, here's my 4.2. Or here's a tape of 100 properties, kind of works the same. I've got this much square footage. I've got this, do I have a basement? Yes or no? And says, okay, this 4 bedrooms, maybe it could be 6 bedrooms based off the square footage. Okay, great. I'm paying X for it. It's in this area. So I think you can get this for the rent. What does it come out to for an unlevered return on cost? And, you can look at that and say, okay, well, hey, I compare it to a single family rental. Because my view is, no one pays me enough to put up with a low yielding property, right? It doesn't do me any good to get something on that isn't isn't going to perform well because our growth engine is all referrals, right? If Vee does well, she brags about it to her friends. She does more, everyone's happy. She does poorly, she trashes us to her friends. She does less, none of that's good. So we're very, very intentional about finding that right asset fit. And we just get involved. Now, you never know 100%. Oftentimes, you go in with assumptions and they have to be validated. How many bedrooms is going to be? You kind of need to walk with the general contractor. It's hard to say. If we have a floor plan, we can tell you to 95% accuracy. If you just have square footage, it's maybe more like 75%. General contractors walked it and really taped it and broken out the laser. Hey, now we're at 99% accuracy. What are the prices going to be in Atlanta? We can tell you to 90% accuracy today. Houston, we're a little bit smaller there. Maybe it's 85% accuracy. What would it be in Raleigh? Well, I don't know, 75. I don't know.
Right.
But it's so either way, we try and validate those assumptions as we go and just be as transparent as possible about what we know and what we don't know. Because it's always, anytime you get in one of these projects, there's always things you have to accept risk on.
And when you're trying to get into or you're looking at new markets, you have to have a certain minimum volume of activity to get going, probably, I would assume. Yep. Is that, do you want to have 4 or 5 deals to get rolling, or are you figuring, is that another one that you're figuring out as you go along?
A little bit of both. So yeah, we do need a critical mass. We like to say that we don't want to go into a market unless we have at least a 25 bedroom pipeline, which is about 4 or 5 houses, So, but there's other things to it around the market and demand in the market and the size of the market. So if you wanted to do, say, Raleigh scores really well on our demand scores, which is essentially measuring Google searches for rooms for rent, Craigslist listings, all those sorts of things. It's a pretty good size and growing market, so we feel good about it. If you wanted to do 25 rooms in, say, I don't want to trash anyone's home, but Sheboygan, Wisconsin, I don't know how it does on the demand scores. We've never measured it, and it's not a huge market, so that wouldn't do it for us. So there's also a legal overlay. Our legal team goes through and says, okay, how does this market look? What are the risks? And you never have perfect knowledge. I mean, actually, Raleigh is a good example because it's highly federated, right? You've got Raleigh, you've got Durham, you've got Winston-Salem, you've got all these different towns. They all have their own zoning. That's just the way it works. Whereas Houston is Houston for 50 miles and they have no zoning. So there's multiple things we need to think through as we go through the process.
Got it. Thank you.
So 2017 was when you guys started. What does your organization look like today?
Yeah, so we've about 150 folks. We are remote first. So even though we're headquartered in Atlanta, we have people kind of all over, even internationally. We had 15 engineers in Ukraine. So we've had a lot going on. But yeah, we're headquartered in Atlanta. We have people in California, Texas, New York, Florida. Yeah, kind of all across the U.S. and a fair number of folks in Turkey, Philippines, Ukraine, although less so now. So yeah, we're sort of spread out all over, to be honest. And then we've launched 9 markets within the last year. So even operations on the ground, a fair amount of growth as well.
Do you guys have boots on the grounds for every market you in?
So not for every market we're in, but we have a general manager for every market, but some cover multiple markets. So we have a Florida general manager who handles kind of Tampa to Jacksonville, and he lives in Tampa, but we cover both in Orlando through him.
So I think we are coming up on the top of the hours, and I'm going to ask you some final questions as we open up. What is the one thing that people might be surprised to learn about you?
Oh gosh, yikes. Well, I'll give you a few, and they're only slightly embarrassing. Or I'll give you one. It's only slightly embarrassing. I love...
The more embarrassing, the better.
Yeah, no, we don't have enough time for that. I love show tunes. Like, I've always loved musicals. I know, like, all the words to Les Mis and Rent and everything. Needless to say, that was I was not a cookie cutter Marine. People were not expecting that, but I just love it. Can't help it. It's who I am.
Show tune, huh? Okay, last questions. How does the audience get in touch with you?
Very easy. You can reach out to me personally. My email is just frank@padsplit.com. You can find me on LinkedIn, Frank Furman. I'm easy to find. Go to our website, set up an account. If you do that, you will be contacted by one of our much more knowledgeable and friendly account executives who are much better at what they do than I am. So it may be more helpful, but of course can always reach out to me directly.
Thank you for watching the Real Estate Ballers show. If you find value in this show, give us a like and subscribe to us right now. Also, give us a shout out on social media using the hashtag REBallers. And before you leave a comment below. Let us know what's working for you, what's not working. Thank you and see you next time.